Hi everyone, how's it going? It's 6 a.m. on February 7th, half an hour before the market opens. And the last couple days, the market hasn't really been doing anything. It's just been going sideways. We are waiting for earnings to stimulate us and see if we can get some direction. So we'll take a look at that. We'll see if the earnings that released last night and this morning were enough to do that. We have another wave of quite significant companies reporting either today afternoon or tomorrow in the morning. So there's another chance, there's one more chance this week for us to at least get a little bit of directionality. Let's see how our futures are doing. Okay, and we've got up on the border of significance, the S&P about 30 basis points. We've got Dow about 15 basis points, and the NASDAQ at almost half a basis point. So probably about, or not half a basis point, half a percentage. So about 45 basis points, looks like, roughly 45. A little bit of significance in the NASDAQ. That's interesting that is opening up higher. S&P is also, well, they're all opening up higher, but it's interesting that the NASDAQ is opening in the significant zone, whereas the other two are not. Let's see how that developed in the morning. Looks like we really started moving up. We were very flat pre-market and then all the way until 423, 424, 425. Somewhere around then, that's when we really started to make the move upwards. I was going to say that if it's so steady, then it's not necessarily news related, because news related usually are spikes up. So I don't know what would be causing this. There's, earnings don't release on, well, nothing gets released at the 23, 24, 25-minute mark. It's always going to be on the hour or sometimes on the half hour. So this is unusual. For whatever reason, we just caught a bid in the pre-market over here, or actually in the futures market, and then it bled over into the pre-market and in the indices. I don't know that I'm going to be able to find out, because it's not necessarily a quote unquote a reason. There's not necessarily a news item or an event that drove this. It could just simply be the movement and the rhythm of the market. And normally we don't go straight up like this, but in the pre-market, there's not nearly as much volume. So I would be a lot more weirded out if this was during the normal session. So in the pre-market, okay, we don't have a lot of liquidity. It could just be trading very smoothly upwards. We'll see how that develops throughout the day. We are up near this purple line that we drew here, which was the high that we made on Friday, the all-time high that we made on Friday. So it looks like we're going to approach it maybe in the morning, maybe get some resistance right there. And our tendency is to open and then revert towards the close, not necessarily make it all the way to the close, the previous day close. So in the initial movement, at least the higher probability event is to come back down, and then we'll see from there. Maybe earnings were so good that we would continue to move upwards and make a new all-time high. But without much stimulation, it's possible we could hit that all-time high. There must be some stimulation here for us to move so steadily in one direction. So I just don't know what that is yet. And we'll see. We'll see if we'll be able to figure it out throughout the day. Let's take a look at the overall daily basis picture. It looks like we're going to open up near that all-time high. That's the same thing that we said just now. QQQ, same thing, near the all-time high. And then this is starting to become what some people would call a ascending triangle. I don't use those too much. Like I said the other day, I don't use these patterns of candlesticks too much, like cup of handle and flags and whatnot. I depend a lot more on price action and volume, and then a couple simple things like moving averages. But here, if we can see between the purple lines here. We've got this flat purple line and we've got our trend line. And you see how it gets squeezed, that eventually it has to break through one of these lines. It could keep bouncing in between them, but there's less and less room. And as no choice, by February 16, it has to either be below this sloped line or above this horizontal line. So that's why some people like to use them, because that said you have a defined point of it's either going this way or going that way. I don't necessarily do that, but it can be good to know that you have a set date for everything to happen. I don't know how I'm clicking all the wrong buttons. Okay, so QQQ. Gosh, I am clicking all the wrong buttons. So do we break out today? If we don't, we're going to get a lot more cautious, because then we've had a double top. If we start heading down towards this trend line that we drew, we really will pay very close attention, because we could either bounce off, or if it breaks through, now you've got a double top. And then generally it means further downward movement. So, and I know I just said that I generally don't use these candlestick patterns, but the double top or triple top is more significant because it shows you a resistance zone. It shows you a supply zone. So it's actually not a candlestick pattern. It is a revelation of, hey, there's a bunch of sellers up here. This is a zone that's going to be difficult to cross. And if we can't break through it, then we're just going to move downwards. And if the market makers are full up on their inventory and they need cash, then we're not going to be able to make our way through it. So we want to watch these levels very closely. Today is going to be very telling. Even if we don't get the direction today, we will know whether or not we are capable of breaking through this supply zone today. So we'll watch that very carefully. If we look at IWM opening a little bit higher, but straight into the EMA 8 and EMA 20. So that's going to be somewhat significant. If we break through here, we still have this sideways trading zone that we've been in for a couple months, one month. So we're not going to, it'll be interesting to see if we make it through those moving averages, but if it does make it through, we're not going to make a big deal out of it. It has to get out of this zone before it can start moving higher. So far, it doesn't seem to be that likely of a case for IWM, because we've been seeing this flip-flop between sectors. We've semiconductors, tech, consumer staples, healthcare. It's just back and forth, back and forth. So that's a little bit indicative of sideways trading as well. But when we're seeing the jumble of sectors, that means there's no conviction. That means investors or institutions are having trouble deciding where to allocate their money, because if one sector, the sector that they choose today, becomes the weak sector tomorrow, and then the completely different sector becomes really strong, and then they just revert throughout in the week, which means that, remember, most institutions are not day trading. They are not even swing trading. The majority of money in institutions are actually retirement funds. And retirement funds have mandates on the holding periods of their investments. So they cannot go in and out, in and out, in and out. Once they put money in, they have to commit. And they can't, if they can't see which sector is going to do well, then they're going to have trouble evaluating the value of what each stock or each sector is supposed to be. So it's kind of like saying that, hey, bread is on sale for $2. Oh, bread's $5. And the next day it's $3. And the next day is $10. And the next day is, okay, well, how much is bread? You'd say, well, it's somewhere between $2 and $10, which is a pretty big range. It's not like, oh, Today I go to a grocery store and bread is $4, and tomorrow it's $4, and tomorrow it's $4, and tomorrow it's $4, and tomorrow I know exactly how much bread it is. So when it's all over the place and bouncing around, I don't know how much it is. So institutions are going to have a lot of trouble figuring that out right now. And they're just going to wait, which is probably why we have this chop. When we get clear direction, that's when you'll see capital going to work or capital coming out so that it can go to work later. So there's not that much to look at because everything's just been going sideways. TLT is retracing a little bit back to the kind of the middle of where we were yesterday. So again, looking like sideways movement. So we're not going to get too much help from TLT, it looks like, or from bonds, I should say. And we've got the earnings. So let's see what some of the more significant companies did. We had Yum Brands. Yum Brands is kind of gapping down, gapping down. So McDonald's did poorly on their earnings. They gapped down a lot more significantly than Yum Brands did. Yum Brands, baby moving down. So the restaurant chains, the fast food restaurant chains look like they're struggling. If fast food restaurant chains are struggling, then we have concerns about the consumer. Either the consumer is super strong and they're choosing more expensive things than fast food. Generally, that doesn't happen because the convenience element of fast food is still there. So there will still be, even if you're doing really well, a lot of people will still choose the fast food just because it's quick and available. So generally, when we see weakness in fast food, that means families are starting to feel pressure and they are choosing not to eat out, not to eat at even fast food restaurants. So not only are they not eating out at regular restaurants or fancy restaurants, they're not even eating out at fast food restaurants. So we're looking at, these are earnings from the previous quarter towards the end of last year, which is that the last quarter was the whole holiday season. And we saw a lot of spending during the holiday season. But if they had to stop eating their fast food in order to do that spending, that is indicative of a consumer that's in trouble. In the United States, that's significant because our GDP, there's 4 major categories in the GDP. That's consumption, investment by companies, corporations, government investment, and then import exports. So the consumption portion of it is 70-75% of our GDP. So if we start seeing weakness in that consumption, that's bad news for our economy. And if you have a consumer that's no longer spending, that's bad news for the earnings, excuse me, of companies. So that is an indication of future weakness because we have delays in the numbers, but we're seeing early signs that it might not be so great in the next few months. So again, well, not again, but that is indicative that we may have a force that pushes us downwards. So we may get that pullback or correction that we've been talking about. But this is a force that acts more slowly. It would be further down the road. It wouldn't be imminent. It wouldn't be 1 or 2 weeks from now. It might be 1 to 3 months from now. Let's see what else. Uber is down. So we hit that all-time high yesterday and earnings is not helping it go further up. It looked like it could have started on this parabolic path, and it's still possible because we were just opening near the open of yesterday. It could still trade up and maybe even make an all-time high. It just depends on how people feel about the future prospects, the future projections that Uber gave out. But obviously at the open, they're not super enthusiastic about it. We'll see if money comes in a little bit later. Snap not doing well at all. Huge gap downwards. Snap is, let's see what they do. I thought they were Snapchat, but obviously I'm wrong. Bar chart. Snap. Computer services data processing. Oh, it is Snapchat. Okay, so that bodes very poorly for communications. Let's see if we have any pre-market data on XLC. Communications up a little bit. That's interesting. Okay, so Snapchat doing very poorly. I would imagine that it'll start to drag on the communications sector soon. Just hasn't hit in pre-market yet. But this is huge because this was a nice steady movement upwards, and it started before that big movement in the S&P. It started right here October or beginning of October, whereas the big movement upwards in the S&P was beginning of November or very end of October. So it started a month before, and it was very steadily moving upwards. It only had a very brief sideways movement right here, whereas the S&P 500 had two, and they were more extended. So this was stronger than the S&P 500. And then over here, it just chopped sideways all this time. It looked like it might have started to sort of go parabolic, but it went sideways before it got really parabolic. And then we've got these earnings, and suddenly we're way down here at the MA200. I wouldn't be surprised if we retrace back, if we start to fill this gap, but I don't know if we're going to fill the entire gap anytime soon. That's troubling for Snapchat, and at least in the short term, it's troubling for Snapchat and the communication sector. So we've got some interesting, let's look at it real quick, Baba. That's a little bit more reflective of China. They gapped up yesterday. Now we're right back to the previous day close. So we completely filling the gap at the open right here. That's not great news for BABA, not necessarily too reflective of what's happening in the US, but it will have some effect on e-commerce type of stocks today. And let's see if anything else. What was the one that we're Enphase? We were looking at solar stocks yesterday. So Enphase gapping way up to above the MA50. So this probably cancels our ideas and plans for looking at solar stocks. Let's take a quick look at TAN. Yeah, TAN is going to gap up above the EMA 8. And I think above the EMA, it's hard. Let me delete these lines. A little bit above the EMA 20. So for now, we're going to avoid the solar stocks. That idea that we had yesterday is invalidated for the moment. Okay, so as you can see, we have a real mixed bag. Certain sectors doing really poorly in the earnings, certain sectors doing really well in earnings. So again, it's hard to get the value of the market. And as long as that continues, we're going to get sideways movement. Hopefully, we'll get a clearer picture from the round of earnings today after market and tomorrow before market, and then we can get some direction. But for now, the same conclusion as yesterday. It's looking more and more like we're just going to chop sideways, and then we'll see what happens once we hit either these all-time highs, which we're pretty close to, or this trend line right here. So don't be surprised if trading action is kind of muted or the exact same as the last 2 days. So maybe we get a sharp movement and then nothing, or we just stay as nothing throughout the day. Given that we've already moved so much in the pre-market, it's probably going to look more like Monday than it looks like Tuesday. So we'll see how that develops, and then I will see you guys in the aftermarket.